I told you yesterday that we had the bullish reversal of conditions for momentum with the NASDAQ. I told you momentum line had turned back to bullish. I'm looking for this divergence. Let me just get rid of everything else so you can see what I'm looking at. Again, looking for green awesome oscillator bars to show up. We've got the bullish reversal of conditions. You see the little blue arrow? You see the little blue bars, the green cloud? I had to get it on Friday, but we got a topic till the rally was given back, but we held above the 10 period and we got it on Monday. I've talked about that yesterday. I think we get an earnings rally that gives us this divergence that forms on the awesome oscillator, and I think that will complete our rising wedge patterns in the daily time frame. So I expect to see green bars this week with tech earnings. NASDAQ may move to new highs because we don't have a bullish reversal of conditions with the S&P. We have a triangle where we've gone sideways. So again, we'll be watching another triangle like we got over here. We'll be watching to see if the green bars begin to show up, or do we just go negative? And again, we have that other scenario where we have a back test of the rising wedge. My guess is that we're going to form this divergence, as I keep saying, to complete our rising wedge pattern. So again, I do believe we're going to see new all-time highs, as I've been saying, because the October sell-off only gave us a sideways corrective move. It's likely a divergence is going to develop and a continuation pattern has formed. P daily here. And again, I'll be looking for a bullish reversal of conditions. We have it on the NASDAQ. And then I'll be looking for it here on the S&P, and then green awesome oscillator bars on both to complete the divergences. And again, do we start selling off later in the week if that forms, later in the week with the jobs report, or do we complete a divergence and start selling off with the election or the Fed or in the Middle East or something or whatever? Combination of any of those. Earnings, things to be paying attention to, but again, we likely have completed a triangle continuation pattern on the S&P. Now, while I expect this divergence is going to form here in the daily time frame to complete our rising wedge pattern, which you'll see in this video, and I have two different rising wedges. The trend line is broken and we're back testing. The other is still intact. The divergence here carving out, and I think will allow the divergences here in the weekly time frame to play out. Like I said, we can still go up and hit the upper boundaries I've been talking about. You'll see that in this video with the weekly chart. I think we have a triple negative divergence in play here. We're getting a red awesome oscillator bar. That might go away by the end of the week, but it's warning, hey, momentum is starting to wane. And that's what we've seen with our peak from mid-October. And we broke that winning streak last week. Watching, does the red bar complete by the end of the week, or does it go away? Times you get a red bar to move to new highs, and then again it eventually plays out where the reversal starts. At times the red bars show up and they go up and start a reversal, or as the reversal has already gotten underway. Watching, does this go away? We got one on the Dow as well. We don't have one on the NASDAQ, but we have one on NASDAQ 100 futures, and we'll see, do we close strong, do we close weak by the end of the week, going into the election, going into the Fed meeting, watching to see how it unfolds. And again, still possibility of escalation with tensions in the Middle East. Whether Iran responds or not, we just simply don't know. It may not take that risk because Israel ended up destroying their air defense systems. Just another thing to be paying attention to. Again, do we get further escalation and more tensions in the Middle East? Does that rattle the market? So far, the drop in crude oil prices, we ended up getting that relief rally. I talked about that over the weekend. And we saw the rally and the gap higher on Monday. And we saw crude oil here drop sharply. We had the market rally because of crude oil dropping. But then we started to see yields creep back up. Created a pullback yesterday. And again, today we went to new highs, but then we got potential reversal bar. We're coming up to this trend line. This is a 10-year Treasury note yield right here. It has had a positive correlation for a little while. Switch back to a negative correlation. The market has pulled back and has corrected in October, really sideways, forming a triangle, which you'll see in this video. I think is about to break out to the upside, and seen the yields go higher, and it's come right up to this trend line here, going back into 2023. April of 2023, I think we're going to reverse off of this trend line. We're at the same levels where we were, where the NASDAQ peaked over here. I think the 10-year yield will start to turn down and the market will go higher, but then eventually the S&P will join the 10-year yield and we'll go back into a positive correlation. I told you here it is up close. If I just bring it up close, that's the trend line, and we're coming right up into it from these previous lows. And you got a possible topping tail and a reversal bar. We had rallied during the session for the 10-year yield, but then reversed and actually closed down. So again, I'll be watching. Do we drop back below the black line, the 200 period moving average? Do we turn off the trend line or try to get back above it? We'll see what happens. I think you got a good shot that we're back testing that trend line. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please support the channel. If you could take a moment to do that, I would really, really appreciate it. Thank you for your consideration for that. If the S&P's triangle is going to get an upward resolution, we got to see the trend signal here turn back. The bullish momentum has turned back to bullish here intraday. And if that does break out to the upside, again, we could see another divergence, reference point of a divergence, or even a brand new one develop should we get an upward resolution of the triangle that I'll be talking about in this video. Yesterday we had the bullish reversal of conditions on NASDAQ. We don't have it yet for the S&P 500. We had the momentum line turn bullish yesterday, and momentum firmed up again. I think we'll get this multiple point divergence completing here. I think the awesome oscillator will turn up, but we're already moving highs on NASDAQ. I think S&P will likely join it. Recent highs here finish our rising wedge patterns. Momentum shifted back to bullish yesterday on NASDAQ. Trend signals remain bullish, but momentum is still bearish for the S&P. Trend signals are still bullish, but momentum is still bearish. So again, we'll be watching to see if the triangle plays out and we get an upward resolution. We'll see the triangle later in the video. Here, the momentum line is still bearish. We went into negative territory with the momentum oscillator, and then we have still a bearish reversal of conditions. So we'll need to see that change. If earnings can do that, then again, the rising wedge pattern, larger rising wedge pattern that I've been talking about, then comes into play, which you will see shortly. Okay, we've got really important earnings this week, and again, a lot of tech, a lot of S&P companies. In after hours, we have AMD, we have Alphabet, and we have Snap. Tomorrow after the bell, we have Microsoft, we have Meta, and we have Coinbase. Thursday after the bell, we have Amazon, Apple, Intel. So again, a lot of Magnificent Seven stocks, Wall Street darlings. Quickly, we'll check on AMD, Alphabet, and maybe Snap. We had Alphabet come out, and Alphabet beat on earnings, beat on revenue. That's helping NASDAQ 100 futures apparently in after hours, because right when the earnings were reported, they bumped higher. Just quickly, if we look at after hours trading for Alphabet, it is currently up right around 4.5%. It was up 1.78% during the session. So a nice pop there. It is helping the NASDAQ in after hours NASDAQ 100 futures. We had Snap come out. They beat on earnings, but they're saying the guidance going forward might be a little bit lower for the fourth quarter. But with the beat on earnings, they are up in after hours by 10%, also helping the NASDAQ, and they were up 1.77% during the session. So a sharp increase there in after hours. Got the AMD earnings, and AMD is down by 5% at the moment in after hours. Look at this right here. We started to sell off at the end of the session on NASDAQ 100 futures. We got the Alphabet earnings, we got the Snap earnings, and we rose back up to slightly higher levels. And then we got the AMD earnings, and we turned right back down. So we'll see what happens. Right now we're trying to bounce here in the 5-minute time frame. Again, AMD beat earnings, but gave weak guidance going forward, so the stock is down in after hours, and that's why we saw a pop on NASDAQ and then a drop. We'll see how it looks overnight and on into tomorrow when the NASDAQ begins to trade for the session. But that's why is weak guidance going forward for the fourth quarter. And just a little bit ago, it was down 5%. Now it's down 6.25%. That was up nearly 4% for the session, during the session here, AMD. So again, giving all that back and then some. So Alphabet and Snap getting a pop, AMD getting a drop. Earnings and after hours. And we'll see how the rest of the big tech earnings go later in the week. Now, we had the Dow down by 154 points. We dropped 0.36%. Dow and the Russell were down. S&P and NASDAQ were up. S&P was up 9.5 points. It had rallied to higher levels at the session, but pulled back towards the end of the session. We were up 0.16%. NASDAQ rose by 0.78%, and the Russell was up, the Russell was down just over 0.25%. The VIX was down 2.32%, but still holding above 18, just under 20 at 19.34. As long as the VIX holds above the 18 to 20 area, there's risk of a spike in volatility. Here's what's going on. Today for the session, we gapped lower. It was a gap and trap on an intraday basis. Here we had, last Wednesday, we had a gap and a go. Here you can see, Thursday we had a gap and fill. Okay, and today we get a gap and trap. So again, you gap lower and then you move in the other direction. This is just on an intraday basis. But here we gapped lower, we rose, and then towards the end of the session we pulled back. We did get, on the 5-minute chart, the 50 did get back above that 200 period moving average after crisscrossing a little bit, gapping down, and then getting back above the 250, ended up getting back above it as well. Here's the deal. We had that gap last Wednesday. We went back, filled the gap there Friday, and remember we had that sell-off ahead of the weekend. Remember, we had the 10-year yield rattling the market last week. Peaking right now. It just hit a major trend line and got a topping till today. Moves lower. We can see the S&P go a little higher, but then top out as well. They'll have a longer-term positive correlation. But we came back down, and then we gapped higher on Monday. Came back, filled the gap today. We filled the gap today and gapped lower today and filled today's gap. So we filled both Monday and Tuesday's gaps, and again got back above that 200 period and came back to it at the end of the session. That's a price action, a gap and trap for the day. We'll be watching to see if we come back here and try to move above last Tuesday's peak. And if we can, I'll just switch over to the 15-minute chart so you can see if we could get back above last Tuesday's peak, then again we could challenge our high, our recent high from earlier in the month. We'll be watching to see what happens. Be able to clear this downward trend line. Here we broke this trend line, we back tested it. So again, but we are getting the 50 back above the 200 here in the 15-minute time frame. Again, I expect that we're going to challenge that high and form a divergence on the awesome oscillator. We've got to be able to clear Friday's high, filling the gap from Wednesday's gap down, and be able to clear Tuesday's peak and be able to clear last Friday's peak. So those highs from last week, and if we could get above them, we could challenge the high from about a week and a half ago there on the 17th. Price action today, even though we trend line on the 15-minute chart, we have this triangle now that's developing on the 60-minute chart. Remember I talked about this triangle and I told you we were still going to go to make new highs. That was because the NASDAQ hadn't filled its gap yet, and I told you the S&P is not done. And just as we've been going back on the S&P 500, we've been kind of sideways again. It's now forming this triangle. So I don't think the S&P is done. I think we have a continuation triangle. We're seeing momentum try to turn back up. I think that's going to take the S&P to a new high. And I think that the S&P form a divergence on the awesome oscillator in the daily time frame. I've been talking over and over about new all-time highs. I talked about it back in August. I talked about it in September because I expected NASDAQ to fill the gap. We're now up there. I don't think we're done. Again, looking for a topping process. Be surrounding earnings. That could be surrounding the Fed, surrounding the election. I expected a post-Fed pivot rally, and we have it. We're getting it. And again, that before the September 18th meeting. I told you after, and we are getting it. I believe we're going to form a top and start a reversal. Yes, yes, I do, but I keep saying it over and over. I believe, again, that the new all-time highs were going to come, and I still believe they're not. It's not done yet. I predicted the rally, saying since I predicted that we were going to sell off in July, that we were going to go back and make new highs on the S&P 500 because I expected NASDAQ was going to fill the gap. I expect that a top is going to form and a reversal will eventually happen, but I don't think the new all-time highs are done yet. Rather than selling off in October, we went sideways. We peaked over here in October, and we sold off a little bit and went sideways and formed this consolidation in the form of a continuation triangle. Triangles can't be reversal patterns. My guess is it's going to be a continuation. And again, I've got a trend line from these highs over here. I've got the rising wedge pattern. So again, I think the rally is going to hit here, and then I think we're going to complete that rising wedge daily time frame. This is 60-minute chart, another triangle developing, bouncing off of S&P's average price there. Now, in early October, we were forming my triangle here. I talked about that at great length and detail. I told you I don't think we're done yet. We got the pop and the breakout into mid-October, and then we peaked out, forming this divergence right here on the RSI. And since mid-October, we've declined, and now we've gone sideways. So we've corrected sideways, forming another triangle. I think we're going to pop up into this trend line right here, the upper boundary of our rising wedge in all likelihood. Again, my target for the S&P has been 5750 to 6,000. Again, the monthly trend lines. I've talked about this at great length and detail. Again, I talked about a larger divergence developing here. Again, we could push up into this area and get a brand new fresh divergence. Bitcoin is getting the big rally, seeing the highs. Again, the market is likely going to follow Bitcoin's lead, and then we'll see what happens. I think you're going to go back up into this trend line. I think you're going to go back up and slam up into the weekly trend line, and again, our long-term trend line in the monthly chart. I've talked about these trend lines at great length and detail. This divergence right here, again, the divergence that's set up right here gave us this sideways correction. This divergence gave us a sideways correction as well. So again, key support holding at horizontal support from the previous peak over here, and here, key support holding here from these levels right here, and again, the S&P bouncing off support levels, forming this triangle. I think we're likely to rally here with tech earnings, and then again, see a reversal with the jobs report later in the week. Could see it with the election or with the Fed next week. I was looking for a post-Fed pivot rally. We're getting it. I told you it could go on longer. It could go shorter. It could go longer. It's going on longer. We've seen in October, we've seen a volatility start, but we only corrected sideways. So this is likely a continuation pattern, in my opinion. Complete our rising wedge here on the S&P 500. Now, if we don't make it to the upper boundary, I'm looking at the highs right here, pointing to just a bit higher right there. So I'm looking at that as well. Here I have both of the trend lines drawn. We're trying to bounce off the 20 and the trend line, including the shadow. So again, important trend lines, the upper boundary and then the trend line right here from these two peaks that gave us our diversions, that gave us this pullback to the 20-period moving average. Are you picking up what I'm throwing down? We have two scenarios, and both are still in play. One is that we broke the trend line already, and we've been in backtest mode, and we're eventually going to take out the 20 and start moving back to the 50 or the 100, and coming back down, start a reversal. And again, possible head and shoulders in play if the move is done, and we'll see momentum turn down and other indicators begin to turn down. So that's the bearish scenario, that we've already peaked, that we're back testing, and when the back test is done, we're going to resume the decline. So that's the bearish scenario. The bullish scenario is we're going to see momentum and other indicators turn back up, and we'll get a triple divergence, which I think is more likely, and we'll see the awesome oscillator form a negative divergence, which I've talked about in every single video here. I still think the S&P is likely going to move to new highs. So again, we've got this triangle, this sideways correction that's going on here, and I think we're going to end up getting back above that broken trend line. But I want to show you the bearish scenario, and this scenario assumes we've already peaked and we're about to downturn with tech earnings. This assumes the rising wedge has already broken down and we're in backtest mode. Now here I have the rising wedge including the shadow down here, and this scenario assumes that we haven't broken down, and again, we're consolidating and we can still push higher up into this level, or like I said, to these highs over here, just a little bit lower than that. But I do believe that, again, likely that the S&P is going to form that divergence on the awesome oscillator. We could see we had really a Class B divergence here on the MACD with these two peaks right here. We could see a divergence, a Class A divergence, where you get a lower high. Class B means there are two equal peaks and price moves higher. That's what it means. There's Class A, B, and C divergences. Let me say that. I'm just referring to the class of divergence that we have. I think a Class A will form where you end up getting a lower high if we can get the rally continuing. We're bouncing off the 20 and the trend line. If we can get back above that 10 period, we start getting a bullish reversal of conditions with momentum. I think you get it, and then I think that's it. Complete another reference point. We had a little divergence right here on the RSI. We can complete another reference point of a divergence in the next few days. And again, then we'll be watching complete divergences on the awesome oscillator. What's the catalyst? And again, I've talked about earnings, tensions in the Middle East, the Fed, the election. At the rally ahead of the election, could be we get a sell-off with it. You're watching, does the S&P bounce off the 20 and the trend line right here? And if so, do we get an upward resolution of the triangle that tries to go towards that upper boundary? A very reliable reversal pattern here in a bearish rising wedge. And like I said, if it's already done, then we need to see evidence of that and start seeing downside and signals begin to turn bearish. I told you I thought we would go higher. I've been saying that. I believe a divergence is likely going to set up on the awesome oscillator in the daily time frame, which I've talked about in every single video. There you have it. The rising wedge, including the shadow. I've talked about it, excluding the shadow, and the divergences that I think are likely in play. This upper boundary right here could come into play, or again, connecting these two levels just a little bit lower. I think that these levels could be reached. One of these trend lines also going back up and hitting the upper boundary on the channel in the weekly time frame. And here they are. Here's the upper boundary right here, a little bit higher, and then here's this trend line going back over here that I've drawn from the July peak to those recent peaks, and that's a little bit lower as well. So just some trend lines I'm looking at here. I think the RSI is going to push up right here, and I think it's going to complete this one more reference point of a divergence, and then I think it's going to be done. I think we're going to see something very similar to what we had over here, and you had the rising wedge. And again, I've pointed out the similarity in price with the big sell-off, the rebound back up, the lower high, and then the higher high. Very, very similar to what we've had over here. Let me just go back to the daily chart and draw this trend line in for you from the July high. Again, it is a trend line I'm looking at from these two peaks right here, just going all the way back right there. That is a trend line that I'm looking at. Still take us to a slightly higher high, but maybe not reach this upper boundary. So the trend line's here, and then the trend line in the weekly time frame. And that's our channel right here in the weekly time frame. I've talked about this at great length of detail. We slammed right into it. Just over 2 weeks ago, we slammed into that level there. That was mid-October. We've sold off. We broke the winning streak. And now we're kind of going sideways on that 60-minute chart, forming a triangle. So again, we could hit this trend line, could even overthrow it. NASDAQ, when it hit the trend line, it overthrew it. So I want to pay attention to this trend line, the trend lines on the daily chart that I just talked about. And my target level is the 5750 area to 6,000. We may not reach 6,000, but the longer term monthly trend line comes in around the high 5,900 area. We might go above the high 5,800 area and go on into the 5,900 level, which we closer to that monthly trend line that I've talked about. Again, look at the divergences. Again, selling off in July. I was telling you we're still going to go make new highs. NASDAQ's going to fill that gap at 20,400. The NASDAQ, again, a rally today. It was up just under 1%. It was up 199 points. Again, I think we're forming this rising wedge as well. My guess is we're going to get a slightly lower high. I could be wrong about that. We could go up and move above this high. Why did I think we had a peak here? We slammed right into the monthly trend line. We slammed right into the weekly trend lines. We got a 9 count in the weekly chart. We saw the monthly charts get 9 counts. So I think that there's a good chance we got a top right here. If I'm wrong about that, again, I predicted we'd come back up here and fill the gap here at the 20,400 area, which we've now done. So I'm looking for a topping process. We did it here just over 2 weeks ago. Now we're moving slightly higher. I told you, again, it's likely going to happen because I'm looking for that divergence on the awesome oscillator in the daily time frame. But I think you're going to complete this rising wedge, and then I think you're going to break down and start a reversal. We are getting lower highs over here, so again, possibly another reference point of a divergence. Could form a brand new divergence in this most recent price action, as I've been saying. Regardless, I'm looking for the divergence to form on the awesome oscillator in the daily time frame. And we've got the same thing going on here. We've got a possible back test. I drew in this shorter term rising wedge here just from the low that we had in September. I've taken the trend line here back from the August low for the larger one. And again, we're just directly below that level. Again, talked about, do we have a divergence that starts giving us a sell-off, or do we turn back up and form a triple divergence? Well, we're turning back up and forming a triple divergence. S&P very well could do the very same thing. It's not turned back up here with momentum yet, but it could. And again, we have this rising wedge. And again, do we overthrow the previous peak and move to a new high? Again, the rising trend lines are just directly above that level. Or do we just turn right here with this rising wedge getting a lower high? Regardless, I am looking for a double top pattern to develop. And again, there's a rising wedge that developed and a triple divergence over here that gave us the 16% sell-off. Triple divergence here, very similar, developing. Here you can see it up a little closer right here. Again, the back test, possibly a back test here if we turn down from this rising wedge. And again, a little higher with this one right here, the black trend line or the red trend line from these previous peaks here. Divergence developing on the RSI, MACD. Again, a Class A divergence here. Looks to be under construction. So again, we'll see what happens. We'll see if we break to a new high or not. And a very reliable reversal pattern in the form of a rising wedge. If we just look at the rising wedge from the August low, the August low here, again, the high dotted red line right here directly overhead. We have the gap fill that we've done that. And I talked about this, that again, you can fill the gap and you can sit here and come around here. Or again, maybe I'm wrong about this being the peak and we go to a new high. It's certainly possible. Expected to come back up here. Here we are. We're holding above the 10. We bounced out the 20 over here. The S&P 500 is bouncing off that 20 period moving average. And here the upper boundary, I've excluded the shadow over here. And it's just directly below from where we're at now, just a fraction below. If we include the shadow, again, a little bit higher above that. We've already seen NASDAQ composite move above this peak. We'll see if the S&P or the NASDAQ 100, if it does the same. NASDAQ composite is all-inclusive. It's the tech-heavy everything on the NASDAQ composite. Just bring it up here, you can see, again, we previously peaked above it here 3 sessions ago, and now we're closing above that level. We'll see if NASDAQ does the same thing. But again, directly overhead, just going back to the NASDAQ 100, directly overhead, we have this trend line. Sometimes rising wedges overthrow. We'll see if we get that here. And then we'll see, again, do we move above this level? If we do, you have the trend lines on the weekly and the monthly chart. We have this trend line as well, and I wanted to show you this up close. Again, the trend line I'm showing you on the other chart is this trend line right here. And again, the trend line going all the way back, and this is what I did with the S&P. I went back here and to the decline that we had during July, and again connected those peaks, and that would take us to a new all-time high on the NASDAQ 100. We get a big earnings rally to a new all-time high, then this is a trend line that I would be paying attention to. Should we clear this one, or the like I said, excluding the shadow, we're just directly below it right here. Including it, we're just a little bit higher. And again, we're looking at that upper Bollinger Band as well. Do we end up closing above the upper Bollinger Band? Could, if we head towards this other trend line up here. We have that stochastic turning back up. I told you I thought we'd rally and get the divergence on the awesome oscillator. I thought we'd get a lower high here, but I told you I could be wrong about that. If we do, we have, again, this trend line coming into play, and then that would take us closer to the trend line in the weekly time frame, which here in the weekly time frame, we have this parallel channel from the pandemic low. This goes all the way back to 2020. And again, it would be directly overhead. We would come back and flirt with this high right here, possibly moving slightly higher if we attempt to reach that upper boundary. We'll be watching. I thought we had a top in July, and again, I've been saying I could be wrong about that, but we hit this trend line, we hit the monthly trend line, and I told you if I'm wrong about it, we just go up and hit those trend lines one more time. Oftentimes, NASDAQ and S&P will diverge from one another. So again, NASDAQ will get a lower high. If that proves to be correct or not, or if we do try to make a higher high, I've been saying all along I could be wrong about that, but that's my reasoning of why I thought we had a peak in July. See if NASDAQ 100 moves above it or not.